Are you looking at the Royal Belgian Football Association fan token, ticker BELG, and wondering why it is flashing sell signals on a downward trend, while a small group of traders insist it is completely undervalued right now? Welcome back to the channel. Today we are diving deep into BELG, currently sitting at around 31 cents. This is the official fan token for Belgium's national football team, designed to give fans a voice in team decisions, VIP perks, and exclusive rewards. It is in sharp focus today because despite a sudden 5% jump over the last 24 hours, the long-term chart looks incredibly shaky. Before we break down whether this token is a massive discount or a dangerous trap, make sure to hit that like button, subscribe to the channel, and drop a comment below with your current strategy. Seriously, leave a comment right now. It helps the algorithm tremendously. Let's look closely at the technical analysis because the charts tell a very specific story. We are seeing a distinct prolonged downward trend line. Every single time the price attempts to rally, it hits a heavy wall of resistance and gets pushed right back down. While this recent 5% daily bump feels good, the overall momentum is still weak. The key support levels are being tested repeatedly, and if those levels snap, there is very little historical price action underneath to hold it up. Short-term strength is minor, and the macro weakness is still dominating the asset. If you look at the algorithmic trading signals and analyst sentiment, the consensus is leaning heavily toward a sell or strong sell. The negative signals are piling up, and the short-term outlook suggests that this minor 24-hour green candle might just be a temporary relief rally before another drop. This brings us to the ultimate crypto debate. Is BELG criminally undervalued, or is it a classic value trap? The bulls argue that because the market cap rank is sitting way down around 4200, any sudden spike in fan utility or a major tournament run could cause the price to multiply rapidly. But the bears argue this is a trap designed to lock in liquidity. The downside risks here are massive. Fan tokens suffer from extreme volatility and low trading volume, meaning retail traders often get trapped because they buy in during a hype cycle and find themselves unable to sell without crashing the price further. If we look at the bull case, a best case recovery scenario requires a massive surge in utility, major token burns, or renewed fan engagement that forces a breakout past key resistance. The bear case, which is the worst case scenario, shows a painful continuation lower where the token slowly bleeds out liquidity and hits new all-time lows. In the short term, expect choppy, highly speculative price action driven by day traders. In the long term, its survival depends entirely on whether fan tokens can prove they are a viable asset class or just a passing crypto fad. So, is this recent 5% bounce the start of a legendary reversal, or are you just watching the slow liquidation of a dying fan token?